so we can post it out there for them. So let's see, it looks like Sarah Rose has like a whole stack of papers that she's just like, I have, and then who was it that said, was it Annalisa said like, I have questions, and she said it in this voice, almost the voice of thunder. So why don't we get into some questions and see if I can make it easier to understand or just confuse you more. That's not my goal, by the way. I want to make it easier.
Mine is more a housekeeping thing.
Okay.
So I'm supposed to be presenting this week. Do you have suggestions on the best way to do that? And how do I need to take the access quiz before I am able to access the questions?
So the questions are on the quiz access.
Okay.
The ones that you'll do. So they come from the quiz access. I don't have a specifics, I think the standard that I see the most is people just sort of record themselves doing the quiz access, and usually they do the problem like once and think they got it right, and then check it and then go through it again. I've seen people who use Excel to make that. I mean, you've probably seen some already that people have done, and I don't have a preference. I don't think one is necessarily better or worse than the others. I do think we have a lot of students who could use Excel tutorials as well. And so if you're good at Excel and use Excel, then I would say do it with Excel. But if it's not your strength, then you don't have to feel obligated to do that. The other thing is Canvas can be a little bit of a bear if you're trying to upload a large MP4 file. I strongly recommend uploading it to another server, whether that's YouTube or like if you do it on Zoom, you can just save it to Zoom. You just need to make sure you go in there on the permissions and say that it doesn't need a password, which you can mess with if you've never done before, but it's not too bad. Or I guess you can leave it with a password and then just put the password in the text, and people can add that password. So that's what I recommend. It's uploading an MP4 is dicey.
Okay.
Does that help? Did that answer your question?
I'm presenting this week too, Sarah, and I already put mine in. If you want to look as like just a reference of what I did for like, maybe that might help too.
Did you do it in Zoom or did you do it in Loom?
So I actually did mine on GoToMeeting because same type concept as like Zoom or Loom. That's just the company I work for. So that's the platform I normally would use, but it's very, very similar process. And so I just put a link that you can just click on the link and it takes you, so they don't have to download or anything.
Oh, perfect. Okay. Thank you. It makes me more comfortable with it.
Yeah.
Well, I'll tell you, and what's interesting is I'm surprised by how many students still don't feel super comfortable with the process. And I'll like, there's probably not a week at work that I don't have some sort of a meeting over either Microsoft Teams or Zoom, or have to present in that way. And so it really is a good skill for the modern sort of workforce, even though it's not that fun. It's just something we all have to do at some point. Not all, but in many jobs now. The number of students I have, they're like, I don't need communication or people skills. I'm going to be in accounting. And I'm like, sorry, even accountants work in teams now. And it's the idea that you're going to hide behind a desk somewhere and just do the numbers, which I would really love, but it's not there anymore. Maybe in some places, but nowhere I've seen. Anyway, you could do this.
Yeah.
All right.
Thanks.
I believe in you. How's that?
Wonderful.
Daily affirmations. Okay. That's what we should do. How like everybody just log in and be like, you're smart, you're capable, and people love you. Like every day, we just have a 1 minute affirmation meeting. I don't think
I do that with accounting. I can do this lesson. It is so easy.
This is going to prepare me to better serve in the Lord's kingdom. I'm not sure how yet, but it will, like that. All right. More questions.
Pick me.
Do it. All right.
Okay, a couple. So on the same lines as that, it was a little bit confusing because when previously I presented, like you turned in your presentation and then it was several days later that like the quiz access is due. And this one's a little confusing because it has like on Wednesday, presenters only, but then it looks like the presentation isn't actually due till Saturday, but that's the same day that quiz access is due for everyone.
No, the quiz access should, or the present, let's see, maybe I made an error in something I posted. It's possible. I thought the presenter thing was due. I think I just typed it in wrong. It's due on Wednesday. It's under midweek, but then it says on Saturday. So that's my
Yeah.
bad.
So is it actually due tomorrow?
Yes.
Okay.
Did you know
Good
that,
to know.
Sarah Rose?
I was like, I thought so, but I wasn't 100% sure. Okay. And it's just one question this time. The last one was 3 questions. It's just question 6, right?
I'd have to look at it. So let me,
Sorry.
yes, if that's what you saw.
Okay.
Because whatever's on the, let's see. I'm glad you brought it up. So I'll send out a reminder to people who are maybe thinking, oh, I don't have to do this until Saturday. I'll send out a reminder email tonight. Because that's, like I said, I was just looking at what I posted and it was in midweek assignments, but then it did say, like you said, it said Saturday. So don't hate me, Sarah Rose. She's like, you're fine. It's just your face that I hate, or something like that.
No, I thought it was
Right.
Wednesday. In fact, I'm just glad it wasn't the week that it was like due on Monday. So I'm good.
There you go.
All right, good.
So on those same lines too, I'm a little confused on the ethics assignment because it says like your first draft is due, but then I don't see where a final draft is due, like
Yeah,
later
okay.
on, or what,
Yeah,
like, can you clarify that?
I think that's probably a screw up on my part too. My problem is I've taught this class for so long that they used to do multiple drafts, and now I think they just do it as a, and so I think I still put first draft in there, but I think it's just a single draft. Let me double check, so I don't lead you astray.
What was that for, Annalisa?
The
Sorry.
ethics assignment for this week. So it shows it's due on Saturday, but then in the announcements it said like the first like
Draft,
draft of it.
and I'm
But then
pretty
it
sure.
does also say you can submit it once more after receiving feedback from your instructor. So I didn't know if that meant like if we get them all in early, then you give feedback and then we resubmit, or kind of, I'm just not real clear on the expectation as far as like turning it in and refining, or if you really just only want one version. I don't know.
Yeah, no. So I think let's do this. This was an error on my part. So 2 errors on my part. You can fire me if you want.
Oh, please don't go.
Where I think we used to do this where we had like everybody had to do a first draft, and then they submitted that, and then we gave feedback, and then they submitted a final draft. And then they said they kind of switched it over to this. You can submit it for feedback if you want. So what I'm going to do is change that announcement, and maybe I'll put an announcement out there saying, in essence, what's today, Tuesday? If you want feedback before Saturday, then you're going to need to get it to me by Thursday. In other words, if someone submits it Friday or Saturday, that's just going to be their final submission, because I won't have time if everybody submits them Friday night to give feedback by Saturday. So I'll put that out there. So that'll give a couple days. If people still want to submit it for a feedback first, then let's get it in by Thursday. And if you don't care about, if you're like, I know how to do this, I don't need your feedback, fool, then you can, and first of all, it's mean to call me a fool. But secondly, secondly, it's fine if someone wants to just submit it like on Saturday or something. And because a lot of people, I know, they log in and like check it on Saturday and they're like, oh, I got to do this. Maybe you guys don't do that, but I did that some when I was in college. Okay. Just so you know, every professor has had to go to a ton of college. So we get it. And most people who have master's and doctorate degrees also had to go to a ton of college after they were married and had kids and everything else. So I commiserate with bad instructors who give confusing instructions. I get you.
Oh, thanks for clearing that up. Okay.
I'll
Okay,
own
now
it.
can I ask like an accounting question that
Okay.
hopefully you can clarify?
Let me
So
before you do, let me write down a note to make that, or else I'll
yeah,
forget. I'll be like, oh, I'm going to do that. And then I'll leave this meeting and be like, I don't know, wonder what's on TV. And then I'll forget. So we're going to do ethics assignment. I know me when it comes to this sort of thing. Due date info. Okay, ready.
Okay, awesome. Can I share my screen?
Let me make it so that you can, because this always defaults to where you can't. Should be able to now.
Okay, awesome. So where I am getting confused, and hopefully I'm not the only one, when I'm looking at this quiz access here for the classified balance sheet, and I know I have to like fill things in and I'm looking at assets. So when I look at this, the fields that I can populate in assets, I look at are like, okay, cash, but cash is a debit, but on the balance sheet, only the credit field is available. And when I look in the manual, it looks like these are all like cash is a debit. So I'm confused on what this problem is actually asking me, because if I think asset and I was gonna pick like a current asset and put like cash, but then I realized I can't put it as a debit. So I referenced the manual and I'm like, it's a debit here. So I don't understand
Sure. No,
what's
so
being asked here.
right. So balance sheets are not written in debit credit format. Okay.
Okay.
So you're on the right trail here to call that current assets and then cash, and then you'll list the other current assets there. The reason there's sometimes two columns, like if you look down a little ways, that'll
Yeah.
be so that because that will be so that you can show an asset that has accumulated depreciation together with its accumulated depreciation account in those left-hand columns, which will
Okay.
then kind of let you subtotal. You'll see that they've actually got the zero there, like it's set to
Here.
calculate for you.
Okay.
So that's what that's for. It is confusing because the trial balance is in debit and credit format, but the balance sheet is not. And then the one you were showing in the book, it looks like it kind of is, right? Like it looks a little
Yeah.
confusing. But so just so you know, like in real life settings, I've seen them both where they're all in the right-hand column, like where this one is, except for the assets with their depreciation accounts, which are in the left. And then I've seen kind of like the one that's in the book too. There's some slight variation in what you'll see like in a real world setting. But don't think of these as debits and credits, and that will help a lot.
Okay.
Just the
Thank
total
you.
balances of those accounts.
That definitely helps. Okay, because I was starting to put it in, then I'm like, no, I'm off base. So okay. Thank you.
Other questions? Just happy to be here. That's okay too. I put out there, I just sent out, I know it was a few days after they were due, but I sent out some feedback to you on your exams. You'll notice it's fairly general feedback with an offer for something a little more specific. Unfortunately, they don't, I guess for the protection of the exam, they don't want us, sending out like specific questions with what the answers are and things like that. But what I can send you is kind of like a little exam report that shows by learning objective how many questions there were on that learning objective and what your percentage score was. And so that's helpful because it helps you see like, okay, so this is the area where I seem to really be struggling. And you can go back because the textbook is also laid out by learning objectives. So you can see the ones where you did better or worse. And if that doesn't solve it for you, I am willing to like meet with you one-on-one and try to go over specific things. But for a lot of people, that's it. So if you want me to do that, then just go where I've put that feedback in on the exam and just reply to it and say, yeah, please send me that. And I'll send one of those to you. But telling me right here will be a good chance for me to be like, yes, and then be like, ooh, who said it? So it would be way better if you respond to the little feedback in the exam.
Okay.
Thank you for that.
I do have a question. I know at the beginning of the year, it said like you could buy certain chapters or to have in a physical form. Can you still, is that possible? I know the bookstore said they were out. I just love always having a book to outline instead of
Yeah,
on the
so
screen.
the short answer is I know it's possible, but if the bookstore doesn't have it, it means trying to order one through like Amazon or something like that. It's probably not cheap. You know, and so, yeah, I think that's sort of the unfortunate reality of ebooks is they've made physical copies of books in even less demand, which actually increases the price of physical copies, because then they're kind of custom printing a small handful of them for the people who want them. And so, you know, if you can't get it through the bookstore, I don't know what, like maybe Amazon has a rental that sometimes you can do relatively cheap.
Yeah.
I don't know, you probably have already looked at that, but it's actually why our college switched over to Cengage from McGraw-Hill, because Cengage will rent you a copy of the physical copy if you're using the ebook for like $7.99 for the semester. And we really loved that feature, because some people just like a physical copy of the book. We like tangible things. I get it.
I just like to go read it somewhere else besides the computer.
Yeah, hunching over the computer after a while, you're like, why is my neck and shoulders so sore? I know, because you're rocking in front of the computer thinking about how much you hate accounting right now. All right.
I was able to get the book through Amazon. I got the loose leaf for $33.
Oh, really?
Yes.
Through
That's-
Amazon?
Mm-hmm.
That's pretty
Oh, okay,
affordable.
great. Yeah, I'll have to check that.
Sarah Rose, does that mean yes, I did too, or does it mean like
Well, I like tangible copies, so I pre-ordered mine through the bookstore when I enrolled in the class. But there's textbooks.com also that sometimes they have ones that I haven't been able to find on Amazon, or the
Chegg
bookstore didn't
sometimes
have.
has it too.
Yeah.
Okay, thank
So-
you. I'll check that out.
Okay, other questions?
Just anything you feel like you need to teach, please do.
Okay, well, I always like, I don't want to waste people's time by like, you know, going on to this long tirade of like info that's probably there as a video. You know, anything that's like a lecture type thing would be there as a video. Let's see, I'm looking. So yes, back to, there was an earlier question long ago by, I think, Annalisa, just that it is chapter 3, problem 6, and that's it. So I just was double checking that. Well, I'm not much of a multitasker, so I'm sort of a
I appreciate
unitasker.
that. Well, the first time I did it, I got this email that was like, just a reminder, you've signed up and here's the problem and where to go. And I didn't get it this week. And so then I thought, well, maybe I'm not signed up. But then I looked at the sheet and I am signed up. So then I was like, wait, am I doing the question? I was second guessing it. So thank you for confirming it.
Okay, so I'm going to pull up something here and try to maybe give you a quick run through on a couple concepts from the chapter, but it'll take me a second to pull it up. Because Microsoft, I have too many OneDrives. I have like my personal OneDrive and my work OneDrive, and then my BYU OneDrive, and then my ASU OneDrive. And so it takes me a minute to find, but because I think I don't ever use my BYU OneDrive, so I think my stuff, my notes for this class are in my personal OneDrive, so they're not in my work OneDrive. Oh, there's a folder called BYUI, Accounting 201, and chapter 3. It's taking me an hour to load it. Let's see. Wait a minute, it's chapter 3, right? Am I looking at the right thing here? Sorry. Should be, right? This week's stuff is chapter 3.
Yeah.
Okay, I was like, I don't want to lead anybody astray, but so the hard stuff in chapter 3 are these deferrals and accruals, mostly because the terms scare everybody, right? You're like, what is that? I mean, we know that to defer something just means to put it off to the future. and that to accrue something means something that's sort of like adding up over time, right? We don't just get wealthy unless we win the lottery. Most of us get wealthy by accruing wealth a little bit at a time. So we know the terms, but how they all work can be a little bit confusing. So this whole chapter gets into these like ideas of like of adjusting entries. And what's confusing about them is I don't think it explains very well in the book that these are really only these really only occur at the very end of the month. So throughout the month, we record transactions as they happen, right? Journal entries. So we receive money in exchange for the stuff that we sell. So that's revenue. And so we, record cash going up and the revenue going up or whatever. But then there are some transactions where we've either received money in the past, and so now we've got to recognize maybe we've earned some of that money, or we've earned money, but we're not going to receive that money until the future. Or maybe we've incurred an expense, like our employees have worked for us, but we won't pay them until payday, which is in the next accounting period. So we have to record the expense we've incurred, but haven't paid it yet. Or other times where we've prepaid for an expense in a previous period, and now we have to recognize that we've actually incurred the expense. So that's what these adjusting entries are all about, is anytime when we have cash and a revenue or cash and an expense not happening at the same time. So at the end of the month, we have to adjust to recognize the expense or the revenue. And the reason, or not just the month, at the end of the financial accounting period. So what we need is for our revenues to be correct. They need to show all of the revenue we've earned during the month, even those revenues that we've earned, but they haven't paid us yet for, right? If we've done the work for somebody, we've earned that revenue, and it should go down in our books as being earned during this financial period, even though we might have billed them and they're not going to pay us till next time. Same with expenses. If we've incurred them, then they need to show up on our end of period financial statements. So that's what this whole chapter, or the big part of this chapter, is about, that I think really confuses people. So we have some examples. The first type are called prepaid or deferred expenses. And this is when we have paid for something in advance. So we've already paid the cash, but at the time we paid it, we didn't record an expense because we hadn't incurred it yet. The most common would be insurance. Like if you pay for your insurance for a whole year, okay, it would be weird to record that as an insurance expense for the whole amount for the year, because you would record this big expense today when you pay it, and then nothing for the rest of the year. And it would look like you just had this one big expense in January or whatever, and then no expense for insurance for the rest of the year. So typically what we'll do is we'll record prepaid insurance as an asset and our cash going down when we pay for it. And then at the end of each month, we'll do this adjusting entry to show that we had an expense, insurance expense, and we're decreasing the asset, prepaid insurance. So if I paid $1,200 for the year for my insurance, when I paid it, I would show my cash going down and my prepaid insurance going up. And then each month I would do an adjustment to show the asset, prepaid insurance going down and insurance expense going up by $100. And I would do that each month for 12 months. And at the end of 12 months, I would have fully expensed or fully recognized as an expense that insurance cost. But instead of doing it in a big lump all at once, I recognized that I was getting insurance coverage for every month for 12 months at $100 a piece. Does that make sense, or is that just confusing?
So you said like you paid the $1,200 cash for prepaid insurance,
Mm-hmm.
but so do you put all 1,200, or you would just put 100 of the cash going down and like 100 of the prepaid going up? Like,
So yeah, what I would do is at the beginning, when I received that, when I paid for my insurance, I would record prepaid insurance and cash. And that would be the whole 1,200. That's the initial transaction. That's me paying my insurance agent for my insurance for the next year. You'll see there's no expense here. Instead, this is an asset called prepaid insurance increasing and an asset called cash going down. Then at the end of each month, to recognize I have used up or incurred some of that expense, I would do insurance expense of 100 and prepaid of 100. And I would do this same entry every month for the next 12 months. What that does is it lets me show that my insurance that I purchased was providing me benefit. That's really what the expense is it's the cost of the benefit of having insurance coverage for at a rate of $100 a month for the next 12 months. So it's just a way of spreading out or allocating that cost over the amount of time we're actually using it. And that's how
So we don't do anything with the cash again then.
No. In fact, when you do these I always tell my students here at EAC, I say, whenever you're doing adjusting entries, if you make the entry and then you look at it and there's cash in it, just slap yourself in the face, because you know there's never cash in an adjusting entry, because an adjusting entry is always dealing with cash having been paid before, so either prepaid or cash that will be paid later, post-paid, or whatever you want to call it. So these type of problems that we call deferred expenses have to do with paying cash up front, but then deferring the expense or putting off the expense until later when we actually incur the expense at a future point. And so that's why they're called deferred expenses. So
is it this, would it be the same if you, like, somebody bought something from you, like you sold, like say you were the one selling the insurance, right? Like, would your cash would go up in that lump sum, and then every month it's the,
yeah, so
like,
that's called a deferred revenue, right? It's called a deferred revenue. So if somebody pays me, this happened a lot in my storage business. People would pay me like, you know, they'd pay me $600 for a year's worth of storage rent. So I would record that as my cash going up and my unearned rent going up. I usually call it unearned rent revenue, just to be clear. And in that case, the unearned rent revenue is a liability, because if somebody pays me money in advance, then I either owe them the service I promised now, or I owe them their money back, one of those two things. So when someone pays me in advance, it creates an unearned revenue, which is actually a liability. And then each month, if this was for a year, each month I would record my unearned rent revenue going down, which is actually a debit since this is a liability account, by 50, and my rent revenue going up. So I'm recognizing the revenue. So that's a deferral of revenue. It's recognizing, even though I've got the money now, I'm putting off the recording of a revenue until a future period when I've actually earned that revenue.
Okay.
Does that make some sense?
Yes.
So other things that look and smell a lot like deferred expenses would be the purchase of consumable supplies. So when I purchase supplies, right, I would just record my supplies asset going up and my cash going down. And then each month or each period as I use up supplies, I would be recording the expense of those supplies and the supplies asset going down. Okay, that's another form of deferred expense. And then the depreciation of fixed assets is also a form of deferred expense. Same thing, right? If I buy a big building for $1 million, it wouldn't make sense for me to just write an expense of $1 million today. Instead, I'm going to recognize that the building has a useful life of maybe 25 years. And so I'm going to spread out that cost and recognize a portion of it each financial period for the next 25 years. So all of these deferred expenses are this sort of action of either allocating the cost of something over its useful life, or allocating its cost as it's being used up as an expense.
Okay, that makes sense.
So those are our deferrals, deferred expenses and deferred revenues. And you'll just remember with the deferrals, it means the cash happened first, and then the revenue or the expense happens later. Okay. And then with an accrued expense, this is where we get to the end of the month and we like recognize, oh, I have certain expenses that I've accrued just due operating. The most common is wages and salaries payable. And so what will happen is we get to the end of the month and we say our employees have earned a certain amount of money, but we don't, maybe we pay them only every other Friday or something like that. So we have to go ahead and record that we have salaries expense because we've incurred it. I don't know what the amount is, 1,500. And then salaries payable, if I can spell right, which I can't. So this would be the recognition at the end of a financial period that I owe my employees money they've earned. So I've already incurred the expense, but I'm not going to pay it until the next payday. Then on the next payday, I'll do this. So this is an adjusting entry we make at the end of the month to recognize that those salaries that were earned by employees but not yet paid. And then on the next payday, we will do salaries payable for those salaries that were earned before the end of the month, and then salaries expense for those salaries that the employees earned from the first of the month up to payday, and then our cash going down by the whole amount. So again, this entry only exists because we need to have our expenses correct on the end of month or end of period reports. For if we had a payday that just falls within, the financial period, then we don't even worry about the adjusting entry because we would just record our salaries expense and our cash. So this only happens when we get to the end of the financial period and we owe money to our employees, and this could be other types of expenses that are the same way, but this is the most common one because almost every business has to deal with this. So this is what we call an accrued expense. Each day my employees work, I'm accruing or incurring an expense, but that I won't be paying until some future point. When I get to the end of my financial period, I need to record that expense so that it will be present on my income statement.
I have a question with that.
Yeah.
In the book, it shows like a note under all of those. In real world situations, do we need to add that note?
So I typically only add notes when I fear there's like some ambiguity in the journal entry I'm making. So if it's something like this that I do every month, I do at the end of every period, I don't usually put a note. Some places really want you to. And so it becomes sort of like the prerogative of the supervisor or of the organization. But to me, these are pretty straightforward journal entries. Like it's super normal thing to recognize this at the end of the month. So I don't usually. Does that make sense?
Yeah. I guess so. In the business that we're looking into is going to have a lot of like equipment, and so on those depreciations, is that kind of like a situation where you would add a note saying like a lifespan of 10 years or whatnot?
Yeah. So yes, somewhere in there you need to explain. Usually it's on that first entry or in the notes section. If they're using like QuickBooks, you can put it in the notes, but you explain the basis for your depreciation, right? And most people will use what's called Maker's Schedule, MACRS, which is just these schedules put out by the IRS to decide like the useful life for their depreciation purposes. And so you'll usually see a note that'll say, useful life of the asset is 27.5 years according to the MACRS schedule. So yeah, it's good to have a note for when you're trying to describe the basis of what you're doing, so that a new person looking at it could be like, okay. But if they're doing a straight line depreciation, if you go back and look at it, you'll see that it's the same amount being depreciated each year. And so that makes it pretty easy to, to I guess backtrack that if you needed to look at the asset cost and then know that the asset cost divided by X, the useful life, equals the amount they're depreciating. You could figure out that basis if they didn't put a note. Does that make sense?
Yep, perfect.
Okay. It's actually like when you're doing accounting work for people and they didn't make good notes, and so you're having to like backtrack through and sort of do some I guess you'd call it like forensic accounting, trying to get to the bottom of it. It's actually super nice when you're billing $180 an hour, because then you're just like, well, you made me spend an extra 4 hours in there, not on me. They sometimes get mad, but then you say you didn't make any notes. All right.
Yeah, it's job security if you don't make notes.
Well, no, that's not exactly true. Like I try to make notes when I think there could be some reason why somebody would question it, which again, maybe that's faulty, because just because I know what I'm doing doesn't mean the next person looking at it will. So, when in doubt, add a note. When in doubt, note it out. That doesn't really stick. That's not great. All right, we'll work on that.
Okay, thank you.
All right. So the last adjusting entry, the last type of adjusting entry is the accrued revenue. And this typically happens for businesses that do kind of work and then bill people at the end of the month. So it's real common for accountants, attorneys, some other forms of service type work, where you just sort of are providing services for the customer and recording what you're doing as you do it, and then you just bill them at the end of the month. And so that's one where you kind of add up how many hours or whatever you're doing, and at the end of the month you just record accounts receivable for 12,500 and service revenue, or whatever your revenue account's called. And then later, when the customer pays you, right, your cash goes up and your accounts receivable goes down. So recognize on these accruals, our adjusting entry is the first entry we make, because we're at the end of the month and we need to recognize that expense or that revenue that was not yet recorded at that point. And then the cash comes later. And with deferrals, the cash had come earlier, and so the adjusting entry at the end of the month is recognizing the expense paid for that cash, or the revenue earned on that transaction. And that's really like that's all that's really happening. There's one of only 4 things really occurring with these entries, but they really seem confusing. I think what makes them especially hard is that they're often presented in a couple of different ways. Sometimes they're presented in such a way that they'll say, like, there was depreciation of $1,200 for the month. So they just give you the amount to depreciate. And you're like, oh, that's easy. But then the next time they present it, they'll be like, an asset that was purchased for $10,000 and had a useful life of 5 years. And then you have to be like, oh, so I have to calculate the depreciation by taking 10,000 divided by 5 or whatever. And sometimes supplies, they'll say that they'll present it as if it's like you used $500 in supplies this month, and you're like, easy, supplies expense 500, supplies 500. But other times they'll say something like, the company had $600 in supplies at the beginning of the month, they purchased $800 in supplies during the month. And at the end of the month, they had $400 in supplies. And then you're like, oh, there's 3 numbers there. Which one do I use? And you have to go, well, I had this much, plus I purchased this much, which gave me the amount of supplies available, minus the amount left over at the end tells me how much I used. So that's the amount of the expense. And so because they often get presented in more than one way, that really throws a curve at people to have to be like, okay, what's happening here? Remember that in the case of the expenses, always what we're asking is how much of that asset, whether it be supplies or prepaid insurance or prepaid rent, how much of that asset did I use up or consume during the period? That will be the amount of the expense. So that helps a little when you realize what you're looking for is the amount that you used. And the same with the revenue, with the deferred revenue, is how much revenue did I actually earn during this period? Because that's what we're going to record.
So can I ask a question on that actually relates to the problem I was showing earlier?
Okay.
Because it's talking about like the revenue and the expenses, but in this particular problem, it shows like a retained earnings balance. It says from December 31st of the prior year. And on the balance sheet, I'm not really itemizing the expenses and the revenue. So are they assuming that you're calculating that differently to put into your retained earnings total on this balance sheet then? Because we would have actually done it in a different format
Yeah,
prior to creating a balance sheet.
right. So that's why we create our financial statements in the order we do, right? We do the income statement first so we can get the net income. And then we use the net income from the income statement along with the dividends to figure out our statement of stockholders' equity, to figure out what our new common stock and retained earnings account balances are. And then we're going to use that retained earnings in our balance sheet. So that's why we have to make them in that order, because we can't know our retained earnings that's going to go on the balance sheet until we have factored in the net income and any dividends we've paid out to the owners.
So because this question is starting us at the balance sheet, and we do have to input retained earnings, and it is telling us the retained earnings from the previous year, but the
Yeah, do you want to bring that question? Do you
sheet
have it up still?
Yeah, can I share it again? Is that okay?
Yeah, let's do that.
Okay.
Make sure I'm not just talking out of the side of my mouth. However that works, it's like that, I guess.
So I can't share till you stop sharing.
Oh, you always have to make it hard, don't you? All right, there we go.
Well, I'm succeeding then. Okay. So yeah, so we have this information at the top here with all of the accounts. And so I was like going through and putting them in, but it tells you right here, the retained earnings account balance was this 136,500 the prior year. But I don't think that's supposed to be the retained earnings that we put here because they don't match. Is it assuming that I should take that from the previous year and actually work out like these expenses and revenue that are up here to change that number?
Let's see. So the following adjusted year-end trial balance. Yes. So what they're doing is they're asking you to go, okay, it was 136.5. That was my retained earnings before. And then so to add net income is the same as adding revenue and subtracting expenses, right?
Okay, so it is one, because it's not an option down here. It just says like, what is, like everything else has a place to put it in.
Right.
But the retained earnings doesn't do it line by line. So it wants us to do that and then put the total.
It wants you to pretend like you're doing a statement of retained earnings, which would be to add your net income, your revenue minus your expenses, and then subtract your dividends. Because that's what you do on the statement of retained earnings.
Right. So but then the dividends do still stay here though, as part of the equity, or no?
No, you don't typically have dividends showing on the balance sheet.
Okay. I'm a little slow, but I'm getting it. Okay. So we calculate that and then put it in.
Yeah.
And then those two should hypothetically match after I've done all of that. Okay. That makes a lot more sense. And it goes in line with what you were just showing us on the Excel sheet.
Hold on, let's just do it. Let's see, except that I did it wrong because I'm a dummy. My mom tells me I'm a smart boy, but
I like your mom.
so I get a net income 22,507, and then we have dividends of 19,000. Which means I get 140,007. Is that what you got? Make sure I
Yeah,
get.
$140,007.
Yep. So we should see if that works.
Okay. Well, that's assuming I did the rest of it right. No. I did something else wrong. I'm off by
But we're
$500.
super close.
I am super close. This is the story of my life. Please tell me, Janet and Sarah, that this happens to you too. Because nothing here is only $500.
Constantly.
All the time.
Your
My dad-
cash,
or
your cash.
my husband hates it.
Look at your cash balance.
Psych, just kidding.
The worst
Yes.
is when you talk to yourself all the time.
And they right there, you've experienced. I tell my students here at Eastern Arizona College, which is a non-religious school, that you can feel that the universe is a place of order, because when you get your balance sheet to balance, there's a certain amount of peace that comes over you when things are in balance. We know what that is, right? We know that. I used to always, when I was teaching accounting, used to think, how can I make this spiritual at all? When I started teaching it at BYUI, and then I realized I didn't have to make accounting spiritual. I had to find those parts of it that touch the spiritual, things like order. And when you feel something that touches that a little bit, you recognize it. You feel like that we know that God's kingdom is a kingdom of order. And while accounting may not be an exciting part of the Lord's work, recognizing the order in things and learning ways to identify and understand that order certainly has spiritual ramifications. And anyway, it's funny how often students will get things in balance, and that little things are right.
Feels
I think
good.
it is. I think it is, because everything is spiritual, right? Everything. And when you, just like when you said that, it's like, yeah, it is such a feeling of it's not that same in any other class. When I get something right, it's like, yeah, good, great, go on to the next one. But this one is just, thank you. And now it all works. It's even.
My daughter's a chemist, my oldest daughter, and she feels the same way about that. So I don't get it because I don't, but just when she sees how those molecules fit together the way they're supposed to, and how they impact the human body in certain ways, how a dopamine molecule will hit that reward center in someone's brain and provide this feedback loop. She sees holiness in things that to me are just are, but she recognizes it anyway. Okay, well, I have another class at 6. I hope this was valuable time spent.
Yes.
And
Thank you.
and I hope is any last thing we should try to cover, or are we good for now?
One last thing I just want to comment, anybody who was watching my screen, I did make a mistake in the plant assets. The expense for depreciation shouldn't have been there. It should have been the accumulated depreciation. So if you were
Right.
looking at that, I did make an error there. So
All right, we're not judging you.
expenses are not plant assets.
Right. Expenses don't belong on a balance sheet, right? But accumulated depreciation does.
Yep.
Those silly contra assets, they're confusing. All right. Thanks very much. Can I get one of you to offer a closing prayer? Seems so long ago. I don't remember who gave the opening prayer.
I will if you want me to.
That would be terrific.
Let me just tell my son to turn off his music real quick. Our dear Father in heaven, we're very grateful for this opportunity to be able to take these classes through BYUI. We're grateful for Brother Fox's time that he has, that he puts forth to help us understand and these principles of accounting. And we pray as we move forward that our minds may be open and that we will be able to comprehend and understand the formulas and reasoning behind all of this. We are very grateful, Father, for the many blessings that thou hast given us and for the opportunity of knowledge and the opportunity to live on this earth and to participate in activities and have the gospel with us. We give thanks and we love thee very much. We pray for these things in the name of thy Son, Jesus Christ. Amen.
Amen. Thank you. Have a great
Thank you.
night.